Welcome back, everyone, to another episode of Frank Finance, where you can get your honest financial information and your questions answered. Today's discussion is going to be, hey, Frank, I want to get into investing. I have $1,000. What do I do now? Well, you've came to the right place because we're going to talk through a 4-step process on how to get going on your first 1,000 investing. So we're going to go step by step through all the things you need to think about as you start to go through the process to invest your first 1,000. So first, you really need to understand your goals. The reason why you need to understand your goals is because if you're investing for the first time, ask yourself one of these 3 questions. Do you want to manage it? Do you want someone else to manage it? Or do you want to find a common ground in the middle where maybe you somewhat passively manage it, but you're maybe more not actively trying to buy individual stocks? So as we think about these 3, these are going to be the 3 kind of different avenues you have as an investor to think about. So the first one is really buying those individual stocks. The second one is a robo-advisor where you'd have like Acorn or Betterment, and those would be managing it for you. And the third one is you would buy index funds, which you would have someone else trying to keep a portfolio together for you, but you still control buying and selling that portfolio. So really think through which of those 3 really fit what your personality would be as we're going through each step. All right, so step 2. Once you've determined your position here on which direction you're going to go, now you need to think about which platform do you want to use. So let's talk about the first one. If you're managing it yourself, an example of this would be using TD Ameritrade, which I personally like the most, but I'm a little biased towards that. Other people do enjoy Webull and Robinhood. Those will allow you to buy and sell individual stocks. For robo-advisors, 2 that I've gotten comfortable with and personally use, I have Acorns and Betterment, and both of them are actually really, I would say, very easy, user-friendly, and do not require a ton of work on your behalf. And then if you're doing the middle ground, actually this is going to be the same as managing it yourself, which means you could download TD Ameritrade, Webull, or Robinhood. All right, step number 3. This is where it begins to become fun. So transfer the funds into the accounts so that you can start actually going through the process. So for manage yourself and middle ground, you really just need to get those dollars available for purchase. So when you transfer it over the first time, you might have to wait a week before you can actually start buying. But for the robo-advisors, when you transfer it to the platform, that's actually when you determine what you want for a split between bonds and stocks. So the younger you are, the bigger the splits you want it to be, where stocks are more predominant, bonds are a little bit lower on that percent, and as you age, you start to up the bonds and reduce the stocks. The reason for that is because bonds only grow at about 2 to 4% a year with dividends, so they're very, very weak against inflation, where stocks on average, when you look at the S&P 500 since inception, is anywhere between 8 to 12%, depending on how you look at it for inflation and when you actually started investing. But that's why you'd be more predominant into stocks in the early days and less in bonds in the early days. Okay, so as you can tell, if you are into robo-advisors, this is where you stop. You transfer the money, you move on, you're done. Now, manage yourself in middle ground. These types are now step 4. Let's talk about that. So step 4, manage your funds. This is where you need to start thinking about the stocks that you use, the stocks that you believe in, or the stocks that you see a future with. So for instance, Tesla's got a lot of hype going on right now. You could see them as being the future for solar panels. You could see it the future for electric vehicles, and maybe that's why you stand behind Elon Musk, and therefore that's a stock that you would like to buy. Now maybe you're a type of person that likes REITs, if you like real estate, and so this is a bucket that's really up to you, and it's one of those things you're going to have to do a bunch of research to get comfortable with. It is the most risky. Mind you, if you think you can beat the market, there are other people that are getting paid hundreds and hundreds of thousands of dollars to make other people money, and you are competing against them. Now for robo-advisors, you kick back and relax. As I just mentioned in step 3, there's really nothing for you to do in this step. It's already done. They take care of it for you. And then the middle ground, which is actually my personal favorite, this is when you want to think about where are you at in your portfolio. So are you looking to get into growth index funds, the total market? Are you looking to get into bond indexes? So what I have here is a couple examples. Is if you want to follow the S&P 500, invest in VU. It's about $400 a share. So if you've got $1,000, you can get about 2.5 shares. VYM. This one is a blended S&P 500 mainly dividend style index fund. It gives you about 3% back on dividends, and as you think about that portfolio, it's a little bit more of a value stock versus a growth stock, so it doesn't roller coaster as much as like a VU would in times of excitement and downturn. And so that one's at about $100 a share. It's about $105, so you could almost get just under 10 shares for VYM with $1,000. And then BND, this is one of those type of hedge against excitement or downturn where you would buy into this index because it gives a stable monthly dividend of about 2.5%, 2 to 2.5%, and this is not a type of stock that will go up and down. So for instance, BND, which is the total bond index fund, when you think emerging markets, you think of the individual bond market, both short, long-term, and medium-term, as well as corporate bonds. It's all roped into this one here. And this one actually almost didn't reduce at all in 2020 when COVID hit. So if you're thinking that the market's going to tank a little bit, think about buying those bond indexes right now. Wait until the market tanks, sell it off, and get back into things like VU or VYM. So as you can tell, I am pretty biased towards letting someone like a Vanguard manage your funds, but yet you still control it versus a robo-advisor. If you're someone that wants to just have money transferred in and be very passive, go with a robo-advisor. It will be less of a headache, and they're controlling it for you. You can update your splits between stocks and bonds relatively quickly, or various different types of sectors that are out there. They have lots of options for you that will suit your needs. If you're really into risking it for the biscuit, which I am not a fan of, but if you like to go into that roller coaster ride of fun, which has the biggest gains and also the biggest losses, then go buy individual stocks and make sure you do your research. This is all I have for this week. Thanks for tuning in. If you do stop by Sunday nights at 9 p.m. Central, for about an hour we talk finance. Anything you can imagine, come chat with us. Till then, have a good night.